You ever look at a stock chart and it just feels like you're trying to read a completely foreign language? Well, today we're going to crack that code. We're putting on our financial detective hats to break down exactly what this chart for Denison Mines, that's ticker DNN, is really trying to tell us.
So here's our central mystery. The stock has been on an absolutely incredible run. But what does that mean for what's happening right now? You see, a stock chart is really just a story. It has a past, a present, and it's packed with clues about the future. So let's decode those clues together and see where it might be headed next.
All right, first things first. Every good investigation starts with just the basic facts, right? So let's establish exactly what's already happened with DNN by looking at the most obvious evidence there is, its recent price action. And the headline fact here is a big one. Over just the last 3 months, this stock has surged about 55%. That is a huge move. And it tells us right off the bat that we're looking at a stock with some serious energy behind it. This is the whole backdrop for our entire investigation. So how exactly did that 55% gain happen? The whole trend really kicked off back in mid-July. But what I want you to notice are these massive spikes in volume. You see them here and here. In the stock market, volume is basically money talking. It shows a huge amount of interest and conviction from traders. The biggest spike of all hit on October 7th, and that's what pushed the price to its peak just a few days later. This timeline gives us all the key scenes of our stories so far. Okay, so we've got a story of a strong run-up. But as investigators, we need to verify this stuff. Is this a genuine, stable trend, or is it just some kind of temporary fluke? To find out, we're going to pull out our first set of analytical tools, moving averages. Think of a stock's daily price like a bouncing ball. It's kind of all over the place, right? A moving average just ignores all those little individual bounces and shows you the average path the ball is taking. It just smooths out all the noise so we can see the true direction, whether it's up, down, or just sideways. And this table right here proves the point beautifully. Now, we're looking at a few different types of moving averages. Don't worry too much about the difference between SMA and EMA. It's not super important right now. The crucial detail, the thing to really focus on, is that the current price of $2.88 is floating above all of them. This is a classic textbook signal that the trend is bullish, and it's bullish across every single time frame. So our first conclusion is officially in. The story we saw on the chart, it holds up under scrutiny. This upward trend is real, it's confirmed. Now let's move on and see how this builds our case. So we know the trend is up, but the next question is, how much power is behind that trend? Is it a runaway train, or is it, maybe starting to lose some steam? To figure this out, we're going to use tools that measure the market's psychology, its momentum. Our first momentum tool is the Relative Strength Index, or RSI. And honestly, the best way to think about it is as a speedometer for the stock. Is the price accelerating hard, or is it starting to coast? The RSI gives us a simple reading from 0 to 100 to tell us exactly that. And here's the reading for DNN. It's at 68.23. So the speedometer is showing some pretty high speed. The momentum is definitely strong. But this also gives us our first little clue that something might be changing. You see, a reading above 70 is usually considered overbought, which can sometimes mean a trend is getting just a little bit overheated. So the takeaway here is a little bit nuanced. The strength is undeniable, you can't argue with that. But it's like a sprinter in a long race. They can't maintain top speed forever without needing to catch their breath. This suggests a pause, maybe even a little pullback, could be on the horizon. For a second opinion, we're going to use another indicator called the MACD, or MACD. Think of it as a kind of health check for the trend. It helps us see if the short-term energy is keeping up with the long-term direction, and it flags whether momentum is speeding up or slowing down.
Okay, let's break this down. The MACD has two key parts. The MACD line itself is positive, which is great. It just confirms that overall upward momentum we've already found. But the histogram, those are the little bars on the indicator, that measures the most recent change in momentum. The fact that it's turned slightly negative, well, that's a subtle clue that the upward force might be losing just a tiny bit of its power right now. So, when we combine the clues from the RSI and the MACD, a much clearer picture starts to emerge. The bullish trend is still very much in play, but we're starting to see these early, subtle warnings that the powerful upward force is beginning to show some signs of fatigue. Now, with a really solid understanding of the past and the present, we can start looking to the future. And analysts do this by identifying key price levels where the battle between buyers and sellers is likely to be fought. We call these levels support and resistance. First up is support. You can think of this as a price floor. It's like a line in the sand drawn by the buyers. And the analysis shows that at $2.76, buyers have recently shown up in force to say no lower, defending the price. This makes it an absolutely critical level to watch.
And if support is the floor, well, resistance is the ceiling. At $2.97, sellers have previously stepped in to take their profits, and that created a barrier. For the price to keep climbing, the buyers, the bulls, are going to need to gather enough strength to smash right through this ceiling.
Now for the really exciting part. With all the evidence we've gathered, the confirmed trend, the strong but slowing momentum, and our key price levels, we can outline the two most likely scenarios for what happens next. So here are the two paths forward, and really it all hinges on that battlefield we just defined. The bullish case is that the slowing momentum was just the trend catching its breath. Buyers will hold that 276 floor and use it as a launchpad to attack the ceiling at 297. The bearish case, on the other hand, is that our momentum indicators were right and the trend is truly exhausted. If that 276 floor breaks, it's a big signal that sellers are now in control. So let's close the case file. What did we find? The overall trend is confirmed bullish. That's a fact. But our momentum readings are flashing a bit of a warning light. The trend might be running out of steam. This leaves us at a critical standoff, a showdown between the buyer's floor at 276 and the seller's ceiling at 297. And that leaves us with our final question, doesn't it? We have a powerful trend that is showing the very first signs of exhaustion. So what happens now? Will the buyers find a second wind and just smash through that resistance? Or is it time for this incredible run to take a well-deserved rest? The chart has given us the clues, and now we watch to see how the story continues.